What's going on, guys? In this video, I want to make a little bit of a follow-up, a little bit of a recap to the recap video that I did outlining the particular setups and the trade setups that could have been taken yesterday. The reason for this video, there was a comment that was made where it was a little bit uncertain when I was going through some of these setups why this one particular trade was not taken. So I'm going to just make a follow-up and I'm going to kind of outline the reason why this was not followed, or excuse me, why this trade was not taken. So the trade that is in question is this short setup trade here. It closed below the 20 SMA at 9:45 Pacific Standard Time. So correlate that to whatever time zone you're sitting on. And then in the video yesterday, I said it does not confirm. So I would not have taken this trade. Now, if you look at the trade, right? If you look at the trade, it does in fact confirm, okay? So it does confirm by, if the price here, I have to like let me zoom all the way in here. This trade does confirm the price was 16,484.77 and the next candle was 16,484.44. So 16,000, again, just to be clear, 16,484.66, or right around that price, 77. And then it confirms because it goes to a price of 16,484.55. So it confirms by like a tick or two ticks. Okay. Here's why I wouldn't have taken the trade and why I didn't take the trade and why in the video I said that it does not confirm. Look at the way that I put my lines, and this is nothing more than just me being a human and just me doing it the way that I do it. What I do is when this trade closes, right? When this candlestick closes below the 20 SMA, I take this price level line. Notice this price level line. I'll just take this off altogether, right? So when I see the candle close, I'm going to click here at the bottom of this price. I'm going to put my price level line here, and I'm going to get a price of 14,483.86. So notice how that's even a tenth of a tick, or 10, like whatever. There was 77 was the accurate price, and where I just dropped this line was 86. Now, to me, on the chart, it doesn't confirm because I don't see it break through my line. Okay. Now, let me take this off again just to be clear. So if someone lets this candle close and they magically put a limit order to get filled right at this price, then yes, you would have been filled. You would have been stopped out. This is a losing trade. So again, you can see you get stopped out there. So your reason why candle was here at 16,503. Your entry price was at 483. So you're talking about losing 20 points, 20 points on the trade. The trade actually closes up here at the 12s. So if you're going to wait for the candle to close, you would have gotten out at 16,512 from a price of 483. So it would have been either a 20-point stop loss if you sold. You have a limit order to sell on the break over the reason why candle. If you do it the way I do it, where I let the candle close, then you would have taken close to a 30-point stop loss, a 28-point, 30-point stop loss. All in all, if you just review the original trades, look at the first setup that confirmed at 530, went for a winning move off the open. This trade was from 467 to 428. So let's call it 67 to 28. We're talking about 40 points there, 38, 48, 58, 68. We're talking about 30, 40 points there. So let's say we made 30 points here. This trade was a winner for 494 to 480. Let's call it 15 points. This was a winner. So now you're up 50 points. Okay, if you take this trade here, it's a loser. Let's say anywhere between 20 and 30 points. Now you're back, right? You're back to like 20 points up on the day. The next trade confirms here the long play that you would have been getting stopped out on. So if you would have gotten stopped out on that, you could have either, if you didn't take the trade, then what you would be looking for is a break in structure, which would be the previous swing high, and that price would be here. Okay, so a previous swing high, and you would have been entering in on this candle here for your break of structure and previous swing high. So again, all in all, you still would have been profitable on the day. But the reason why I did not take this trade is simply other than the fact that when I put my price level lines on here, I do everything manually, okay? So I don't have limit orders. I don't have, a set take profit. I know how many points I want to take profit at. I know where I want to enter. So when I'm looking at this particular trade, if I look at this particular trade, right? I put my price level line on there. It doesn't break through enough for me to take it. Like, it's not really a confirmation. It's like it's testing it by a tick. It's testing it by 2 ticks. It's not like it's breaking down 1, 2, 3, 4, 5 points, right? We're talking about ticks. So when I'm trading and I'm looking at the screens, normally my screen, like the way that I have it zoomed in, is probably about here. So by the time I put my price level line on there, to me, even if I drag it a little bit lower, right, it doesn't look like it confirms, right? So notice how and make sure you guys can see that, but notice how the white line that I drew here doesn't look like this candle confirmed. Now, again, technically, does it take out the previous candle? And does it go lower than the previous candle? 100%, 100%. But for the sake of why I did not take it, or why I said it did not confirm, is because to me, my eyes, as I'm scanning charts, as I'm looking at it, I did not personally take it. This to me confirms, right? This is broken over. That price is broken over. To me, okay, if I draw a price level line, to me, this price is breaking under, okay? Again, if I take everything off here and I kind of just look at this long setup, to me, this price is clear that it's breaking over, okay? Now let me take everything off again and go back to the trade in question. This price does not look like it broke under. So that's why I didn't take the trade. But again, even if you did take the trade, you should still be profitable on the day. It is what it is. Again, it's like an oversight. Like, it's like, I'm a human being as well. It's like, I'm not perfect. Like, but what I see is, to me, I don't see it confirming, even though technically it does by like a tick or 2 or 3 ticks or whatever. So if you are that like anal, like, I'm not saying that in a negative way at all, but what I'm saying is, if you're that meticulous, that's a better word. If you're that meticulous to where as soon as it gets broken by a tick, you're in, then yes, you would have been stopped out for around, depending, 18 or 20 points if you had a stop loss at a limit order, or if you waited for it to close, it's closer to 30 points. But all in all, you should have taken a winner here, you should have taken a winner here, and then obviously you should have taken a winner here on the big run up. So you should still be up on the day. Yes, it probably would have eaten a little bit of profits, but that's the only reason why. I hope that gives some clarity.